Let's get back to the big market moves ahead of one of the most highly scrutinized Fed meetings of the year. The central bank widely expected to cut rates by 25 basis points tomorrow, its first cut since December, amid continued pressure from President Trump. While major averages were little changed today, gold settled at its 35th record of the year. The dollar traded near more than 3-year lows, and rate-sensitive regional banks got hit hard. Bank First, Synchrony Financial, Huntington Bankshares, KeyCorp, among the worst performers in the group, but with broader markets near all-time highs. What do these moves tell us? What do you think it's telegraphing?
Well, it's the gold market's telling something, I believe. I said that for a while. Now, that's been wrong to say that for a while because the equity market, the S&P made a new all-time high today. So clearly there's some disconnect. But the fact that gold goes up seemingly in every environment we can think of is somewhat problematic, I think, if you look at it long term. It's trying to tell a story. And the fact that the dollar has had no bounce whatsoever outside of maybe a 3 or 4 day period a couple weeks ago should also be concerning. Now, people will say a weaker dollar is supportive of equities. I agree with that to a point. You hit that diminishing marginal returns, and I think we're pretty close. The pound feels like it's going to 125. Dollar yen feels like it's going to breach 140. And I think the equity market will wake up and say, you know what, maybe it's not such a good thing. Yeah, there are big moves in the regional banks, and you would think that they'd be a beneficiary of a better economic environment.
Yes, although I guess, I mean, if you look at how far they've run since, Liberation Day, they're up like maybe 40%, which is huge. So I don't know, some of it is maybe just giving that back. But I was surprised how hard they got hit today.
Yeah, and I think one of the questions, too, is what's going to happen with the longer term side of the curve, because realistically, the Fed is cutting into a really strong economy. And what that can do is spur a lot of increased activity in the markets, increased activity in the economy. That can increase longer term inflation. Like, you can get this melt up. And historically speaking, when the Fed cuts in a strengthening economy, the markets are higher 12 months later. But so might be the longer end of the curve, which also can affect like mortgage rates. So you actually might see less mortgage demand if those rates go higher. And that actually could be part of the story. Yeah, that was one of the points Julian Emanuel made this today on the exchange. 12 months out. 12 months out, markets are higher. Were you hosting that show? I was with Mr. Santoli. Yeah, that's great. I was watching. I'm sure you were watching. I was watching Squawk Box this morning, and Treasury Secretary Bessent was asked that question by Becky Quick about it was September of last year. The Fed cut rates, the 10-year yield went higher. What are your thoughts? He said it was different this last year. We're in a much different environment. We will see, but I share the same concerns that, people getting ahead of themselves in terms of rates continuing to go down. I still am one of the few people that think 10-year yields are going higher from here. Yeah. What do you think, Dan?
Yeah, we haven't even mentioned the Lisa Cook situation. We haven't mentioned that this is literally a case that is going in front of the Supreme Court that might actually change the course of the makeup of the governors tomorrow at the meeting. I mean, that's just insane to think about. And so, listen, we got this 4% in the 10-year. We've seen yields kind of run ahead a little bit of a very telegraphed 25 basis point cut here. I'm kind of in Guy's camp here. I mean, and I'm not sure I agree with Courtney that the Fed is cutting into a strong economy. It would just kind of be at odds with what we've just seen in the labor market over the last couple months and the revisions back to June. You tell me there's strong retail sales, back to school, this and that, whatever. I'm like, well, that's what Americans do. We buy crap, And so at the end of the day, if the labor market is weakening, you're going to see other parts of the economy weakening. And then it comes back to why the Fed is cutting right now. And if they cut, do we see inflation pick back up? So at the end of the day, I think it's about as clear as mud. I think that we were going to be talking about this Lisa Cook and Moran situation tomorrow, especially if you have a Supreme Court rule that this person, this governor, cannot vote at this meeting tomorrow. I mean, it's just insane. We're within 24 hours. I saw the bug up there, the 20 hours and counting down.